you guys today. We have on with us Keith Neumeyer. He's the CEO of the world's purest silver producer, First Majestic Silver, as well as First Mining Finance. He's the chairman and founder of that company as well. And they have a gold portfolio in Canada with real mineable ounces. Our other guest is David Morgan with The Morgan Report. Now, he follows the precious metals community and the shares, speaking at conferences, profiling specific stocks to his members. If you're interested in subscribing to his letter or learning more, you can go to themorganreport.com. David and Keith, thank you for joining me.
Thank you.
A pleasure, Daniel.
Gentlemen, I want to get started. Now, the gold market was already kind of in this holding pattern. It's been building up a nice base here, higher highs with each rate hike since December of 2015. Now, my goodness, you look at headlines, and I was telling David before the call, it's like 1,000 needles pointed at a bubble on the market, just waiting for something to prick it. From Syria to China, the rumors of China perhaps halting purchase of treasuries, to the dollar index, what's happening with it and its downtrend, falling like a brick. There's so many catalysts out there, but I just kind of want to clear the storyline here for gold, because there's fundamentals just on the supply and demand side and the production side over the long term. David, let's start with you. Are we on the verge of a breakout to the upside for gold and silver?
Well, first of all, gold actually technically made a breakout, I think, a couple of days ago, but it popped right back down. It broke the downtrend line on the short-term basis, and that's around the 1350 level. Silver is in a wedge, so technically, as the wedge gets tighter and tighter and tighter, it breaks either up or down. Everything I think I've learned over 40 years in this market, it looks like it's more likely to break to the upside. So both are running out of time, so to speak, as far as making a decision, and I think the upside's far more favorable than the downside.
Keith, let me put the same question to you. You specifically, you're out there with the mining companies, and I know you speak at a lot of conferences as well. You do a lot of traveling. Is the setup there? The flow, you've talked about how important the flow of funds is, that from institutions for this to even break out. Is a breakout, are we on the verge of a breakout?
Well, from that perspective, you would think not, because I'm going around the world, as you know. I was in Florida just recently at the BMO conference, and I was at the Sprott conference as well just before that. I'm just on my way to Zurich on the weekend. There's another conference there next week, which I'll be attending. And the institutions are completely out of this market. They're still stubbornly just on the sidelines watching this market break out. And they tend to be sometimes late to the party. You've got the specialists who are obviously always in the market, but their inflows of capital are actually very, very low. Some of them are actually still getting outflows, which is surprising. The big money is really the generalists, the big pension funds, and that money is still on the sidelines. It's not coming yet. So this market is being still supported by the retail investors, and until the institutions come in, I don't think we could really see a huge change. They want to see gold, as David just touched on. Looked like the other day gold was going to break out, and next thing we know, the next day comes along and the metals get smashed down again. So we're still caught in this trading range, which is, I think, frustrating all of us.
David and Keith, are either of you seeing anything unusual, whether it's in the dollar, gold, bonds, anything unusual that you can point to that perhaps has caught your attention that shows that a major shift could be happening? Keith, real quick, by the way, you have a nice strip of sunlight on your forehead, just to let you know. You can either leave it there, and we'll just take it as this is God's anointing on the precious metals market.
I know. I just turned my lamp off to see. I'm in my hotel room in New York, and it didn't seem to work, so I don't know what the deal is.
Okay, well, let's start with David. I know
there's a lot of sun on David. I want to be in David's place.
David, anything unusual that you've perhaps been kind of alarmed by it or encouraged by?
I wouldn't say unusual. I'd say there's two main factors. One's the debt markets. The bonds are starting to weaken. I think the 35-year bull market in bonds has turned to the downside. Interest rates are key. You can read the Silver Manifesto. I go into it in depth. I'll just leave it at that. The stock market as well, I think the top is in. I think you're going to see lower equity prices overall. And as I've said many times, the gold market is the most negatively correlated asset to the overall equity market. And I don't know if it was personal or not, I won't take it personally, but there were a couple well-known analysts that kind of poo-pooed the idea. A recent article on Seeking Alpha about, well, gold and the markets together at times. That's true. At times they do. But from a longer term perspective, gold is negatively correlated to the overall market. It's just like the book Jastrom wrote on the golden constant. Gold maintains its purchasing power over the long run, but there are times when gold is undervalued, fair valued, or overvalued. So I stick with what I'm saying. I think history backs me up. If you want to take a certain segment, you can make me wrong or make that statement wrong, but in the long run, it's correct.
Keith, same question. Anything specific that you've seen that either gives you some encouragement, enthusiasm, or cause for alarm?
Well, from a technical perspective, and David's, watches these technicals way more than I do, but, being an ex-trader, I kind of like the action from a chart perspective. You've got, these metals caught in this trading range. I think we're about 3 years into this now where, this range is pretty darn tight, 1100 to 1300 approximately, or 1150 to 1350, and 1650, 1850, or 1600 or $16 to $18. It's whatever you want to call it, but it's basing quite nicely, and these bases, when they're forming, their processes. Markets don't generally act in V's. They actually flatline for extended periods of time. And then when they go, and you can never really know what the catalysts are that actually ignite them to start. But when they do, it can get very exciting. And I think that's exactly where we are in this current marketplace. One interesting thing in the silver space is that the commercials are the longest they've been in multi years. And David might want to comment on this because he knows more about it than I do. And the hedges are as short as they have been for years as well. So that's a perfect setup as far as I'm concerned.
How about that, David? Something you're following?
Yes, myself, and I think everybody that follows silver closely has commented on the commitment of traders. It's the best setup, as Keith said, in years. And everything that I know about the commitment of traders usually forecasts which way the market's going to go. The only concern I have is normally when what I call the game starts over. In other words, the trading funds have been taken to the cleaners again, and the commercial banks pocket the money, the game starts with a low open interest. Right now, we're at a better setup, but we're at a high open interest, which gives me a bit of pause. I can't really explain it. I have addressed it to my members, but it remains to be determined. It could be extremely bullish. I mean, if the trading funds are so short, which they are, and the market starts to move up, they're going to have to cover rapidly, which of course adds fuel to the fire. So it looks great. Usually the only thing about the COT I think people misunderstand is, although it is a good advantage to know market turns, it's not a very good timing mechanism. So we could be in this range for another 3, 4, 5 weeks, but eventually there will be a breakout. And again, as I said earlier, it's going to be the upside as far as I can see. The other comment is the gold silver ratio. Whenever we get above 80, it usually doesn't last a real long time. And we've been as high as 82 recently. So everything that I know, it looks like we're going to be favorable to the silver market here in this not too distant future.
Did you guys see the comment by Bond King, Jeffrey, I think it's Gondlich from Double Line, commenting on CNBC like 2 days ago? He believes that gold has a 4 to 5 year base here, and he sees actually $1,000 move to the upside when it goes. I know that's a pretty bold prediction. What do you think about that,
David? I'll let Keith answer, and then I'll add on to it.
Okay, Keith, to you first then. You think a $1,000 move to the upside in the near term is perhaps in the cards?
I don't think it's going to happen overnight. I don't think the big central banks who seemingly manage these markets, at least in my view anyways, would allow it to happen too quickly. We've seen $50 moves before. So I would suggest that would happen over a several quarter period. I could see gold ending, the year at, $1,400 or $1,500, whether it's, $1,000 from the current levels. I'd be happy to see it, but, I've been in this business for a long time, and I've been called crazy many times by calling for triple digit silver. I don't want to be on record saying that gold's going to be up $1,000 by the end of the year.
David, where is your expectations for the end of the year price targets? And I know these are speculations, and I'm not going to hold it to you, but where would you expect to see gold and silver trading around December of 2018 or January 2019?
Well, I've put it out publicly and privately. I am looking for a good year, but not a great year. I'm looking for about 1450 gold. And then I did a survey. I read a book recently about the wisdom of crowds. And it's interesting. If you do a survey long enough, you can usually, the mass majority actually gets it right most of the time. So put a survey out in January on my Twitter feed. How many expect silver to outperform gold in 2018? And it was 75% expected silver to outperform gold. I as well. So on that basis, if we get a move in gold that's commensurate with the last couple of years, which gold has been up, as you said at the beginning, or maybe off air, gold's been making higher lows, but it's still in a trading range. You're both correct. So I think you're going to see, perhaps you can see $20 silver. I mean, it could go at any time. I want to make that caveat clear because, as I said off air, there's so many black swans flying around. One may smash into the other one, and all of a sudden we're off to the races. But without that occurring, I think we're going to have a modestly good year for the metals this year.
Okay, David, specifically, I want to ask you, first of all, everybody who understands the gold and silver thesis will end up subscribing to a letter like the Morgan Report because they want to invest in the mining shares. I personally started investing in the mining shares. You know, when I looked at gold, I was like, okay, well, if gold goes up $1,000, it's not going to change my life. And especially here, I mean, if gold went to 1,500 or even 2,000, it's not that big of a move percentage wise. So then we migrate to the mining shares where we can leverage to the price. At this time, David, what's your mood for the mining shares? Are you in accumulation mode, aggressive accumulation mode, or are you just holding and sitting tight?
Great question. I'm going to digress, but I'll come back to your question. First of all, if you go back to 2016, I hit that one perfectly trading-wise. And I'll use First Majestic because we use that one as a trade. And, of course, I still own the company. I've always had a core position, and I trade around it with different ways. I mean, futures, options, stocks, whatever. So if you go to 2016, we got into First Majestic on a trading position around 250. And that stock, when I think you can correct me, I think we got out at 1850. I called the top almost to the day. And if you look, and silver did a good move that year. It went from roughly 15, and you can look at a chart. I think it went to about 20 or close to it. I forget. The point I'm making is the leverage that you just mentioned, Daniel. For silver to perform as well as First Majestic, silver would have gone to like 150. Of course, it didn't even get close to that. So you do get leverage in these shares, especially if you find the right ones, which First Majestic has a very high beta, and it's very well followed by institution. It's got a nice symbol, AG, and, I'm pretty favorable to the company, obviously. But coming back, what am I doing now? I'm telling my readers that we are in an accumulation mode. The market knows more than anyone, whether it's managed or not. I believe it is. But regardless of what you think about management or not, it doesn't matter. We still know how to go along with what the market's showing us. And what the market's showing us is it's still trending, which means we accumulate over time. Once we see a breakout and it's substantiated by what I call the Morgan rule, then we will get more aggressive. So that's my posture at the present.
Keith, I'll put that question to you a different way and kind of grill you a little bit. I think outsiders make money when they buy at insider prices. Are you involved in active buying any of your companies?
Well, I concentrate my investments in a very small handful of companies. I don't pepper the market. I'm not one to have 30 or 40 positions because it's just too difficult to manage. So I tend to get involved in projects, right from the early stages or the most risky levels, as you can imagine, where most people wouldn't even have the appetite to participate. And I wouldn't suggest most people should actually participate at the levels that I start because the risks are just too great. But nevertheless, I do that. And in the case of First Mining Gold, that's exactly what I did, whereby, I formed the company from scratch. We went out and started acquiring assets to the takeover of other public companies and some private companies or private assets. And lo and behold, we have now 25 projects in First Mining Gold with, over 10 million ounces of gold defined in the 5 top projects in the business, all in Eastern Canada. So and I've got a huge position in that company. So, and I've actually continually bought stock. I bought stock at 80 cents last year. The stock's now in the low 40 cents. I bought stock just 2 or 3 weeks ago in the low 40s. And I'll continue to do that. I love buying stocks on sale, and I have no problems doing that, when these types of environments exist. The sector as a whole is extremely undervalued, as you know. The investors out there, you had that run from early 2016, where First Majestic was at 500%. First Mining was $1.30 at the time, and now it's 60-70% lower, and it's really tough for individual investors to really know what to do in an environment like this. But you have to ask, and as I tell retail investors all the time, when you're underwater so badly on a position, if it's changed fundamentally, you may have to decide to make the unfortunate decision to sell the position, and you can't avoid it. But if fundamentals are the same, or potentially even better, and I think the fundamentals for First Mining Gold are actually better than they were a year ago, then you have to really consider either just holding on to it and waiting for another day, or potentially even adding to your position. And that's sometimes a very difficult thing to do.
So that's First Mining operating on the TSX under FF. Now, David, if somebody wants the year picks, they've got to go to the Morgan Report. Now, the Morgan Report was the first to really report and kind of make it go viral about what was happening with the silver market and solar panels. My next question, I know Keith's answer because he actually brought it up to Kitco recently. David, do you now group silver not just as a precious metal and industrial, but is it a clean energy metal? Should it be with cobalt and lithium and zinc and copper?
Yeah, I would say so. I mean, silver is the most diverse metal and the most patented metal for usage other than the commodity oil. And the solar industry has continued to be rather robust. I did a study in 2010 on the next decade for silver. I based a lot of it based on Jessica Prost's work in that year, 2010. And her industry, according to her work early on, was going to be about 140 million ounces of silver after about 5-6 years. We're actually around 70, 80, depending which study you use. But her work was correct. Let me explain. There's been what's called thrifting in the industry, which means each solar panel uses about half as much silver now as it used in 2010, which is economics. This is what you want. You want to get the most bang for the buck. You want to maximize your efficiencies and maximize the output with the lowest cost so you can maximize your profitability. So that doesn't upset me. Excuse me, let me start again. The Silver Institute just issued their World Silver Survey, Thomson Reuters and the Silver Institute. They talked about solar quite a bit in that news release. And of course, you can download the whole survey for free on the Silver Institute's website. They said that the solar industry was up a great deal in 2017, which we expected. And it continues to be a metal that's fascinating as far as heat conductivity, light reflectivity, et cetera. And one area that very few touch on, I'm certainly a bit remiss because I haven't delved into it deeply for a while, and that's what the potential, I'm not saying it's here now, the potential for silver as a battery. And this is something that was kind of a rumor back when Buffett bought 129.7 million ounces of fine silver back in 1999. The rumor was that he had a new battery technology. I'm not saying this is a fact. I'm just saying that this is something that needs to be determined in the future, because the potential for silver's more uses in the future in this high-tech age continues to increase.
Well, just on that topic, Boeing a year ago just installed silver zinc batteries in a submarine that was sold to the U.S. Navy or U.S. One of the U.S. divisions that does long deep underwater voyages. Needs a very robust battery that can last extended periods of time without being charged. And it's quite interesting. You'll see if that technology actually takes off in airliners or in other commercial applications. And there is rumors that it can be miniaturized. There was a company listed on the NASDAQ a few years ago called Zoom Technologies that was actually producing silver zinc batteries for small applications, but they're pretty new and quite early. I think they eventually went bankrupt. they had the right idea, but they just couldn't raise the capital to do it.
Gentlemen, I just want to ask you guys one last question. The distributed ledger and the metals market, there are several companies now coming out with it. I know, David, you had actually, I believe on our last interview, said you were consulting with a company in Asia. Let me just ask you specifically, David, with the distributed ledger and the metals, is this good for gold and silver? Is this PR stunts, or is this something that's going to bring some integrity to the gold and silver market?
Well, you always have to do your own due diligence, and you have to use, reasoned logic to, on a lot of these things. I'm not entirely favorable to the crypto space, but you're correct. I have been working with a company called Lode. You can get more information at https // AG for silver, AG.lode, LOD .1 ONE. It's the first cryptographic silver-backed currency. It is not launched yet. There is an opportunity here for people that are kind of stagnant on their silver position and wish to contribute to the effort. I'm favorable to it. I like the idea of tying the crypto space with something that is of real value like silver or gold. And I guess I'll leave it at that. But I do think the next leg up in the cryptocurrencies could be, not would be, but could be led by some of these asset-based cryptocurrencies. And that means outside the gold silver space, Cobalt, for example, the Democratic Republic of Congo has a crypto-based cobalt effort going on. There's tea, there's lumber, there's a lot of things out there. So I think a lot of people are rethinking this space, and I think going forward it's going to be quite interesting to watch.
Gentlemen, we're out of time. So, hey, I just want to thank you very much for being on.
Daniel, can I just touch on that?
Absolutely. Go ahead, Keith.
Yeah, the phenomenon, that's really driving all of this is, the fact that, we all, the three of us and, hundreds and thousands of other people all are not pleased with the current pricing mechanism that we're experiencing in the metal space. You could point to the LME, you can point to the COMEX, and that's starting to drive change because we all know there's a problem out there. When you're trading 1 billion ounces of silver in a single day in the paper markets and the miners collectively are only producing 800 million ounces a year, the leverage in that space is just, it's too great. And there's just too much control from the big banks in this space, and then proper pricing mechanism just simply not occurring. And miners should be getting a lot more for their metals than what we're currently getting. And so there's two quite interesting efforts going on simultaneously. There's a group of traders that have recently left Glencore. We've been approached by them. I expect to meet them next week. This will be our third meeting with them. They're trying to, they've actually now set up an exchange whereby a miner can actually sell directly to the end user through a web-based portal system with no intermediary. And we're looking at becoming a member to that. So it's still early stages. They've got a couple of groups already trading on that market, and we're currently analyzing it. And another quite an interesting one, which does include the blockchain, is Tradewinds. This is like an exchange that Sprott and Goldcorp have formed. They're the two largest investors in this exchange. They contacted us a couple of weeks ago. They want First Majestic to be the first silver company joining this exchange. Goldcorp just put out a news release last week whereby they just deposited their first 3,000 ounces of gold into the exchange. So it's still early days, and we're currently analyzing whether or not it makes sense for us as a business to join it. But there is definitely a movement going on out there to start finding ways of pricing metals in a more effective or efficient way that benefits the miners and also benefits investors that are wanting to invest in this space.
That is very positive. I did not know that. Okay, so everybody, it's a great time to purchase mining shares. To get David Morgans to kind of look over his shoulder and invest in what he invests or what he suggests, go to themorganreport.com. If you'd like